Good morning, everyone. Jesse Webb, TradersPro. Got a few things I want to go over with you today. We're seeing market conditions weakening this morning with futures moving lower. We had the Fed yesterday with the interest rates. We had CPI data the other day. There's probably more data coming out this week as well. The market's really been focused on that, on inflation, and then on the Fed stance moving forward with interest rates. And after listening to Powell, it sounds like they're going to stay what they're referring to as higher for longer, where rates are going to maintain up in this range. They moved half a point, so we're pushing and right around that 5% range now on some of these shorter term yields, and they're trying to get things to slow down. Now the question is, moving into this next year, whether that slowing creates a recessionary situation in the U.S., and more than likely that's going to be the case. I talked about the yield curve yesterday, and they've got a real challenge right here to manage inflation, and may have to just really kill the economy in order to do that. They feel like the worst evil is inflation, and they've got to get that under control. So we're looking at some weakness this morning. We'll see if that continues. More than likely, that trend, that new downtrend, it's been struggling right here in this range now for the last month, and we've seen that. We've been talking about that trend line coming down, and it's just a struggle right here, and that's what bottoms and tops and some of these sideways price activity creates. One of the things that we've talked about too is this sentiment line. Notice this blue line. Here's the high, here's the high, here's the high, here's the high back here. So you're getting this, you can kind of see it on that trend. That blue line is now right at the top. That traditionally is a bearish location. It can stay really overbought like this, for quite some time. But in a downtrend, we kind of haven't seen this for quite a while, for years and years, in terms of these rallies in a bear market. We're certainly in a bear market, and being able to anticipate what's happening in a bear market's a little bit different than obviously in a bull market. But the positivity of sentiment, typically when everybody wants something, that's the exact time that it doesn't happen. And so we may see that wherever there's some real optimism here in the market, that may be the reason, or part of the reason, when everybody's on one side of a trade, that we actually may shift and go that other direction. Momentum is kind of already doing that. Breadth retracing here a little bit, but the sentiment line is still staying pretty strong. So typically what turns that sentiment is when the market starts to move lower, and then that line will start to come back down a little bit. So definitely some bearish tone here in the market. Buy-sell ratio is also kind of signaling that we're really flat right now, just pretty much at a 1.9. So buy-sell ratio is relatively flat, and that's, we've seen that in the price action here as well. Just a lot of choppiness and just kind of some flat price activity right here. SPY, let me show you SPY as well, because that also kind of reflects the indecision in the market. When you get this, this Christmas tree of color right here, that's not what we want to see. That's an indecision type of price pattern. We want to see all green, or we want to see all red. When it starts to look like this, that's that sideways indecision, and the market hasn't yet to decide which direction it wants to go. We still are in this overall uptrend, still bullish, still have support right here, so we may gap lower into these lows and then head higher. But we very easily could, this trend here, we could very easily slice through that, come back down, maybe retest some lows in these areas. But this right here is signal enough that there's some indecision just to be cautious. And what cautious is going to mean is maybe not taking on new positions aggressively, or tightening up stop losses on winners, getting rid of your losers. Those are some best practices in terms of anticipation of a downtrend, and even potentially looking for some hedges against a downturn by utilizing some leveraged or inverse ETFs. Maybe buy something that will go up when the market's going down, like TQs or SQ. Not TQs on the Qs, that's bullish, but SQs is the leveraged inverse on the Nasdaq, and there are others for S&P and Dow as well. Some things to look at here. We're seeing oil stocks that are still coming into play. and some of these uptrends. So we're still seeing selective stocks still moving higher. So it's definitely a stock picking environment, and keeping risk relatively small so that you're not taking on too big of positions, because sometimes these patterns don't work in a bear market. You may not get the follow through, you may not get the breakout. It just creates a little bit different environment, and something to be a little bit more cautious of. Let me pull back here. Let's go into the new buys, and we'll take a look at the top few here on the new buys. VRNA, that's a stock that's just kind of been slowly working itself higher, potentially looking on a breakout right here. It's got some resistance, but it's got that classic pattern, this cup and a handle pattern with some resistance overhead. That typically is a bullish pattern. It could break out here, although there's, if it doesn't, then we've got a lot of support right here for it to create our risk profile. Where do we place stops and on individual stocks like that? Some of these others are oil stocks. TUSK, oil and energy, nice pattern. HNRG is coal. WFRD, oil field. So, and oil has had a decent little pop here in the last few days as well. It's in a pretty big downtrend. It's retraced about 50% of its overall. Let's look at USO. It's retraced. If we go out to this 2-year chart, let me change this and pull in a fib level. You've got support at 50%. So that's a pretty common location for an uptrend. You take that low, you take that high, and it pulls back halfway for some support. And we're seeing that. There's some support here, some potential support here, and we'll see if that ends up propelling that commodity higher. Oil stocks are still going to perform well because oil is relatively high compared to where it has been the last few years. So there's still going to be some of those oil stocks still may be trending nicely. A couple other things to look at in terms of utilizing the software. This spring-loaded scan under muscle scans finds stocks that have yet to move. They've got a short-term trend higher and a hold signal. So the pattern ends up looking like this, where you've got, let me pull into that 6-month time frame and get rid of this and come into this signal where you get, it hasn't quite moved into that green yet, but it's starting to. So if you're looking for stocks that are starting to move and relatively early in that trend, then that becomes a pretty good scan to be able to go through. If we take a look at and that's the spring-loaded scan. So 9, this is one that actually has been a really big mover, one to keep an eye on because this is a pretty big consolidation phase, and it has the tendency or the potential to move pretty nicely. But this is that's that setup that you're going to see. So that spring-loaded scan, tight consolidation, yet to have a move, but early in that potential move if it is going to move. If you don't have full access to the software, you can sign up below, and we look forward to having you. Have a great day today.